I actually want to start with the price action that we're getting in yields this week. We've had several weakish auctions, 2-year, 5-year, was it 7-year yesterday? No, 10 years. And they weren't very well received by the market. What we have seen is yields have started moving higher again. 10-year sitting at 4.6, still shy of the 4.7 high we got back to in April. But what does this tell you about the U.S.'s ability to place the substantial amount of debt that they're issuing?
Yeah, you're right. Market action yesterday was very interesting. Indeed, we know that there are two issues for U.S. Treasury markets. One is inflation, obviously, with the risk of inflation coming back. And the second one is the fact that the Treasury issuance in 2024 will be twice the amounts as last year. So we know that it creates some stress. We also know that the trough of the market last year, the equity market, was when the 10-year hit 5%. Guess what? We are getting close to this. We are close to 4.7%. So you can feel that the closer we get to this threshold, the more nervous the market is. Global market conditions are good for equity markets, but obviously, if we get, let's say, back to these 5%, we need to know from Mrs. Yellen and from the Fed what is going to happen. Last time they came with this stealth yield curve control. What they have in mind this time. And I think this was the stress of the market yesterday.
I think one of the big difference, though, is, and I'm just bringing up on my own terminal a chart of 10-year JGBs. Interesting to see that today, obviously, we are in a different global bond environment. And one of the major differences is that JGBs, 10-year JGBs, keep moving higher. We're sitting at 1.07%. To what extent do you think is that move in Japanese bonds lifting all other yields around the world?
Yeah, it's a very good point because the U.S. Treasury need to find some buyers. So there are less buyers coming from China. We all know this. Probably less buyers coming from the GCC. And then the biggest clients, the biggest buyer of U.S. Treasury is Japan.
Yeah.
And now with the yields moving up, obviously it creates competition. And this is also another stress for the U.S. Treasury market.
Yeah.
You're right.
So at what point do stock markets start reacting to these higher Treasury yields? You said that 5% last year was the abyss of the market. But so far, we've seen good momentum with S&P, NASDAQ. It was only yesterday NASDAQ made another record high.
Yeah, you're right, because corporate profit growth has been quite strong and offsetting, all of the stress of yields coming up and interest rate expectations being cut down. But yes, as you mentioned, 5% is probably a very important threshold. Also, keep in mind that if you look at the market action, everything except Nvidia, basically, or except the Mac 4, the Mac 5, has been down. Nvidia has added in 1 week the equivalent of LVMH market cap. So it has been crawling out a lot of market cap. The rest is starting to struggle because of the rise of bond yields.
So we spoke about a month ago, I think, and we were just beginning the earnings season in the U.S. Now we've come to the end of it. What were your main takeaways?
Well, earnings season has been quite strong. We are talking about 6 to 7% year-on-year growth. Now, in terms of expectations for 2024 and 2025, we are talking about double digit, which is good. On our side, what we look forward in terms of, let's say, earnings is the breadth, is the quality. It should not just be led by these Mac 4, Mac 7. We expect, let's say, the earnings growth to broaden to other sectors. Very interesting to see that the leadership has been led by utilities. Utilities earnings growth is 30%, and this also translates into outperformance by utilities. So you can see that the AI story is starting to expand in those sectors because obviously performance is not coming from bond yields. Performance is coming from the fact that there is this huge demand for electricity, which is also a secondary to AI. And this is what we want to see for the bull market to continue to move higher, is the broadening of participation, and AI could become, let's say, a global driver of the equity markets going forward.